What's up, millennials? Today we're going to take a look at the valuation of a company called BlackSky. And BlackSky is a space company that is going to be acquired by the SPAC that's trading under the ticker symbol SFTW. Now, before we start, if at any moment during this video you're like, what the hell is this guy talking about? Please refer to my SPAC guide. I made a full SPAC guide video for you. I'm going to put the link in the description so you can actually check out that one for a little bit more information on how I do these valuation videos. Today we're going to be doing method number 2 of the SPAC guide. Secondly, if you need access to the Excel sheet I'm going to be using today, you can join our Discord. It's for free. Just go to nesami.com/discord. You can leave your name, leave your email address, and you're going to get access to it. And the last one, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm not a financial expert, so everything I'm saying could entirely be wrong. First of all, let's do a very brief introduction of this company to see what it actually does. So BlackSky is a space company. They are focused on geospatial imagery, and they're also focused on space-based data and analytics. They apparently already have a sales pipeline of 1.7 billion, and they also have already some revenue, which is already quite a nice advantage compared to some other SPACs out there that don't have any revenue for years. The merger date we don't know just yet, but they expect to close this merger somewhere in July 2021. Then if we look at the pro forma valuation of this company, we can see that they started out at $10 per share, just like almost all the other SPACs out there. So that's the number that I put over here in the Excel sheet. Then we can also see that they're going to have 147.7 million shares outstanding after the merger. So that's the number I put in here. So then we can already determine the so-called pro forma market cap, which is basically the market cap after the merger has happened. So that is simply by taking that share price of $10 per share, multiplying that by the amount of outstanding shares after the merger, and that is going to give you a pro forma market cap of almost $1.5 billion. But then we can also see they're going to have $371 million in cash on their balance sheet. So then we can already determine the enterprise value, the pro forma enterprise value. The difference between the market cap, the equity value, and the enterprise value is simply the amount of net cash. So if we take that pro forma market cap of almost 1.5 billion, we subtract the amount of net cash, then we're going to arrive at an enterprise value of $1.1 billion, which is the worth of the company basically. So based on a price share of $10, BlackSky is worth $1.1 billion. The thing is, however, if we go into TradingView and we go to SFTW, beautiful red week today, or beautiful red day today actually, we can see that they're currently trading at $11.94. So that's the price we can put under the column now. And then we can see that the pro forma market cap has already gone up to almost $1.8 billion. $1.8 billion. And if you take off the amount of net cash on their balance sheet, you're going to arrive at a pro forma enterprise value of $1.4 billion. But we, of course, want to know what the fair enterprise value is, so we can actually go to a fair price per share in the end of this video. For the fair equity, or for the fair enterprise valuation rather, we are going to need two numbers: a revenue number and a revenue multiple. So we are going to work with revenues, and we're going to look at the revenue of 2022 and also 2023. So these are estimated revenue numbers, of course. We don't know for sure if this is actually what they're going to produce in the future, but hey, let's actually play with these numbers. So here we can see the projected revenue for the next coming years. As I said, they already have some kind of revenue. 2019, they had $15 million in revenue. 2020, it was $22 million in revenue. 2021 goes up to $46 million in revenue. And then in 2022, which is one of the years we are going to be looking at, $114 million in revenue, which is also the number that I put over here in my Excel sheet. And of course, also in 2023, they are going to have $223 million in revenue. Keep that number in mind. It's probably an easy number to remember because 2023, $223 million in revenue. So that should not be too difficult. So then we already have our revenue of 2022, $114 million. And then if we go to page 32, we can see a few interesting things. Because we now need a fair multiple to apply to that revenue we have just been looking at of $114 million. What is a fair multiple? Well, basically, I'm not going to go through the entire explanation, but a multiple is one of the ways you can use to value a company. If you need more information, please check out the SPAC guide. Again, method number 2 is the method we are going to be looking at today. Okay, so for that fair multiple, we are going to be comparing BlackSky's multiple with the multiple of other companies out there that are relatively similar to this company. We can see that for 2022, they have a revenue multiple of 9.7x. And then if we go to the right, we can see that there are a lot of companies out there they compare themselves with. And usually the multiples are higher for those companies. We also see some lower ones, for example, like Splunk, and I believe also LiveRamp here. But in general, these are higher. But one important number we are going to be using today is this median number that is over here. A median of 16.7x, which is basically the number in the middle of all of these competitors rather of BlackSky. Okay, so 16.7x. That, according to them, is a median multiple based on the multiples of all of these companies. Very well, so we now have that median multiple of 16.7x, but they decide to go with a range of multiples, not just to have one multiple, but just to have a range of multiples. Here we can see they chose a range of multiples from 15x on the low end, 19x on the high end. So those are the numbers we are going to be working with. A revenue of 114 million and a revenue multiple range of 15x and 19x. So those are the numbers that I put over here in my Excel sheet as well. Let's just pull it up. The only thing now you need to do, well, the Excel sheet is going to do everything for you, but what the Excel sheet does is it takes the revenue, it multiplies it by the low multiple to get at a low enterprise value of 1.7 billion. And it also takes that same revenue, multiplies it by 19, the high multiple, and then arrives at an enterprise value of $2.166 billion. And then if you go over here, you can also see that it's calculating a midpoint enterprise value, which is basically the average between the low valuation and the high valuation. So the low, this one, 1.7, and the high, 2.2 almost, is $1.9 billion in a midpoint enterprise value. Very well. Now we don't need to discount this number back to the current, back to the present, because we are looking at multiples for 2022 for all of the companies. If we would have been looking at multiples for other companies of 2021, and we would be applying that to revenues of 2022 for BlackSky, then yes, then we would actually need to discount these back to the present. But in this case, the multiples are for the same year, so we don't need to discount it back to the present. So we have these enterprise values, but we of course want to know a fair price per share. How do we do that? Well, we said in the beginning of this video, the difference between a market cap and an enterprise value is the amount of net cash they're going to have on their balance sheet. In this case, that was 371 million. So if we take those enterprise values, if we add back the amount of net cash, then we're going to arrive at these fair market caps. So for the low end, you would arrive at a fair market cap of almost 2.1 billion. For the high market cap, 2.5 billion, and for a fair midpoint market cap, you would arrive at $2.3 billion. Now, the only thing you need to do is to take these market caps, divide them by the amount of outstanding shares after the merger, 147.7 million shares, and then you would arrive at these fair prices per share. So for the low valuation, you would arrive at a dollar amount of $14.09. For the high valuation, $17.18. And for the midpoint valuation, $15.63. But at some point in this video, I also said we were going to take a look at 2023 multiples and revenue numbers. So let's actually do that as well. If you remember, the revenue of 2023 was estimated to be 223 million. It's very difficult to say. And now we just need a fair multiple, of course. So we've been doing exactly the same thing. They have compared themselves to other companies. They saw that they had a multiple of 5x. They saw that the other companies had a median multiple of 13.2x. So then they say, all right, very well. So we are going to go with a revenue multiple range of 11x on the low end, 15x on the high end. So those are the numbers that I put over here in my Excel sheet. And then if we zoom in and go back to the Excel sheet, we can see that the Excel calculates the following numbers. For the low valuation, a fair price per share would be $19.12. For the high valuation, $25.16. For a midpoint valuation, $22.14. So according to both of these calculations, that means that BlackSky currently is actually undervalued. And also take into account, don't trust me, verify me, always check what I'm doing if everything is alright. And also keep in mind that we haven't taken a look at assumptions. So these are estimated revenue numbers. We've taken a certain revenue range, a revenue multiple range. So if you change one of those numbers, the entire calculation is going to change and your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!